Welcome back to Finance News. This is episode 24, where I bring you a roundup of everything that's been going on in the stock market over the past week. It's not been pretty out there, but here goes. Let's get straight into your headlines. The stock market may finally come out on top after a 7-week losing streak. The major indices have a great chance to finally finish in the green this week after a losing streak that's been one of the worst on record. Before the market starts trading on Friday as I film this update, both the S&P 500 and the Dow Jones Industrial Average are both in the green. But as with anything in life, let's keep our fingers crossed for a better trading day to close out the week. Biggest winners this week were low-cost retailers Dollar General and Dollar Tree, who both saw a double-digit gain in their share price as they beat Wall Street expectations and handled the pressure of inflation pretty damn well. Dollar Tree, the biggest winner, a retail seller of low-priced goods, posted revenue results of $6.9 billion against an expected $6.8 billion and also showed a growth in some same-store sales of 4.4%, twice as much as what analysts were expecting. True story, Dollar Tree now sells products for $1.25, which is almost one whole British pound. I suppose that's one way to increase sales. Speaking of price rises, slight tangent here, but Costco in the US is still keeping the price of its hot dogs at $1.50 after all of these years. It's the equivalent for us Brits as the meatballs at IKEA. Once those prices go up, then it's finally the sign of a recession to come. Tech giant Nvidia this week announced its results to the market for its first quarter of the year. The company, famous for producing graphics cards and other processing units that definitely always hurt your wallet, delivered results ahead of expectations, posting revenue of $8.29 billion, up 46% from the year before, and showing earnings per share of $1.36 versus expectations of $1.29. However, investors were put off by the reduction in future guidance after the company said that the effect of the Russia-Ukraine conflict would lead to around $500 million in reduced revenues, not forgetting the lockdowns in China too. The company's looking to grow its market dominance in the future of the auto industry as cars and trucks get smarter, requiring more sophisticated chips, whilst also pumping out more cars to gamers and data center owners. Buying on the news and seeing a bargain, Cathie Wood's ARK Fund snapped up a huge tranche of Nvidia shares this week after the results initially sent the share price lower. Nvidia shares have already seen their price reduced by 40% this year to date and now sit around $178. Woods purchased 250,000 shares of the company on Thursday after having been out of the stock since November, selling shares for a profit back then. This new trade marks a new position worth over $40 million for the fund manager, who's currently sitting below the performance of the Nasdaq this year to date by around 30% in the flagship ARK fund. Twitter shareholders are set to sue Elon Musk after filing a lawsuit claiming that the billionaire had been manipulating the price of company stock downward since he'd bid to acquire the company and take it off the public market. Investors are also angry at the way Musk acquired shares of the company, saying that he saved $156 million by failing to disclose that he had purchased more than 5% of Twitter by March the 14th earlier in the year. They also named Twitter as a defendant, stating that they had an obligation also to investigate Musk's conduct, but they're not actually seeking damages from the social media company. The acquisition of the company still looks to be going through, with the share price of Twitter currently sat under $40, up 5% for the week so far. The markets haven't been as kind to Tesla boss, as this company sits down 40% so far this year at around $700 after falling from highs above $1,200 per share. In other news, don't worry guys, GameStop's still not dead just yet. The video game retailer made infamous from the meme stock craze of 2021 is now entering into the crypto market. The company is launching a digital wallet to hold all of your favorite cryptocurrencies and NFTs that you've been frantically buying just as the craze enters a downturn. Lucky you. The company said this week that they will allow gamers to store, send, and receive cryptocurrencies and NFTs across decentralized apps without having to leave their web browsers. The meme stock retailer has hired 20 people to run the unit and is also looking to get some game developers and publishers to also create more NFTs for their marketplace. Personally, I just get high-end artists like Gary Vee to do it.
Once a day, genuinely sit there for 5 minutes and make pretend one of them got shot in the face.
He really knows how to draw. I mean, look, this is a reliable rat apparently. Sold 6 months ago for over $40,000. Not as reliable as the price of Ethereum though, which has fallen more than half from its highs last year. If you are interested, it's set to hit the market in company's second quarter. That's the NFT marketplace, not the rat. Back to the corporate world now. Amazon shareholders have approved a $200 million pay package for new boss Andy Jassy this week. The Amazon CEO, who took over from founder Jeff Bezos, was awarded compensation for the year worth $214 million, made up of 61,000 shares in the company and $175,000 of annual salary. The shares are set to vest over the next 10 years for the new boss, who was initially in the firing line from activist investors who thought that the package was too generous. Shareholders rejected all 15 investor-led proposals that were focused on workplace safety and passed the pay package. The online retail giant and cloud services provider has had a challenging start to the year, with its share price down 35% after fears of higher than expected cost of inflation and excessive capital expenditures. In its most recent results, the company posted a negative net income after writing down nearly $8 billion worth of investment in EV company Rivian, whose valuation is coming back down to earth as investors look for companies that actually deliver cash flows and profits and vehicles. That normally helps. And finally, for our headlines this week, jumping across the pond, UK households are set to get our very own stimulus checks as the cost of living crisis continues. The Chancellor Rishi Sunak announced this week that all households in the UK would receive a £400 discount toward their energy bills in October as part of a new package to reduce the impact of inflation. The poorest households will also get a payment of £650 to help with the cost of living crisis, following warnings from critics like money-saving expert Martin Lewis that many would be left struggling to pay bills this coming winter. The costs of the taxpayer are to be offset by a windfall tax against profits from energy firms who fail to invest their newfound wealth into different projects. The payments to UK households have absolutely nothing to do with the Sue Gray report released this week, showing multiple parties and gatherings taking place behind the doors of Number 10 during the lockdowns of the pandemic. Purely a coincidence. With the headlines completed, let's head over to Fails of the Week, where I found some of the more interesting stories from the business world and beyond for your enjoyment. Just when you think it couldn't get any worse, Fails of the Week. This week got off to a pretty crazy start as founder of Snap, the creator behind popular social media platform Snapchat, Evan Spiegel, wrote to employees on Monday warning them that the macroeconomic challenges in the world were likely to see a slowdown for the company headed into their second quarter results. The founder of the video and photo sharing app reckoned that Snap was a leading indicator for things to come in the wider economy as advertisers were tightening their belts and spending less on platforms that rely heavily on their marketing campaigns. The share price of Snap dropped 40% in a single day, taking the share price back to pre-pandemic prices, and also took most of the market down with it. Pinterest dropped 23%, Google dropped 5%, and both Twitter and Meta also took a nosedive, with the former Facebook company losing over 7% of its share price. Although after the fear had settled, the prices are nearly back to the green for the week for Meta. The same can't be said for Snap. Maybe it's a sign of things to come. I'm definitely too old for all this Snapchat stuff. And after all of that drama, let's head over to our house favourite section where I've got together some of the best trading theme memes from Reddit's Wall Street Bets. Welcome to the best of the bets. Up first, as many people fear the collapse of the economy, the recession, and the housing market, this one's a reminder that some people are very much hoping to do the opposite and waiting for that to happen. You just got to do whatever you can do to get on that housing ladder. This one's funny. If you're an optimist and you've always wanted to see the brighter side of life, then why not imagine a time when you have just nothing in your portfolio? A foolproof way to make sure you can't lose money. At least, anymore. And if you recognise this look, it's the same way that your partner looks at you when you tell them that you've bought any hype stock near its peak, because apparently it can only go up and it will become profitable at some point in the next 10 years. You just didn't know when. And finally, for memes this week, remember how when you first start learning about something, you think you know it all within just a few hours? Well, it happens to everyone when they first start learning about the stock market too. The issue is that too many people stop trying to learn right there, so everyone thinks they're a genius.
Wrong.
Anyway, that's all we have time for this week. For something to watch next, check out this video I just made looking at the way the dot-com bubble can teach us a few lessons about the potential crash in the stock market this year. Anyway, don't forget to leave me a like if you've enjoyed the video, subscribe for many more, and as always, happy investing.